Hello everybody, bonjour tout le monde et puis bienvenue à ce webinaire, notre nouveau webinaire. C'est un thème supplémentaire qu'on vous amène, qu'on vous apporte aujourd'hui. Comme vous savez, le programme ISOR est ici pour vraiment donner de l'accompagnement, mais aussi donner ces webinaires pour les entrepreneurs que vous êtes, ou les gens, soit vous êtes déjà en entreprise ou vous êtes en train de planifier d'être en affaire, de lancer votre idée. Alors, on a eu un webinaire dans le passé qui était sur la comptabilité efficace. Et comme vous savez, si vous n'avez pas participé, vous pouvez aller revoir la présentation. C'était une présentation extraordinaire de Laure Mujum qui parlait vraiment de tout ce qu'il faut pour une comptabilité efficace. Et une des recommandations, c'était vraiment, et surtout beaucoup de questions qui étaient sorties de là, c'est comment on choisit un comptable, parce que c'est un casse-tête pour tout le monde de s'assurer qu'on a un bon comptable qui répond aux besoins de son entreprise. So this webinar today is going to be in English, as our presenter speak English. As you know, we had a previous webinar about effective accounting, and where Laura Mujum, who was, if you didn't participate in that one, please go back and then replay it. You will be able to, if you don't have the link, request the link so that you can learn more. And then based on that presentation, there were a lot of questions about how do you choose the right accountant? And how do you build your relationship with the accountant? How do you really work effectively with an accountant? So we thought that is a great topic. And we have an expert who is also accounting an expert in all financial matters, and is Ezekiel, who is here today, and who is going to be presenting on how to choose the right accountant for your business. I am Rose Cathy Handy. I'm the general manager at Connect Canada. Today, I'm a little bit unwell, so I'm not going to stay with you guys, unfortunately, but I'm leaving you in good hands. So without further ado, I don't want to take a lot of time, and I want to you to welcome Ezekiel, and then don't hesitate in the chat to have your comment, have the questions, but I'm sure he's going to walk you through it. The floor is yours.
Okay, thanks, Rose, for that introduction. Hi, guys. Like Rose rightly said, my name is Ezekiel Akem. I'm a CPA, and I've had a wealth of experience in accounting, in finance. You know, I've supported a lot of large organizations. I'm still currently supporting a lot of large and medium-sized corporations in the areas of accounting, budgeting, financial statement analysis, financial statement presentation, and all other accounting and finance matters. So in our presentation today, I'm going to be giving you guys some ideas on how to partner with, I'll call it partner because it's a partnership, right? So I will give you some ideas on how to partner with the right accountant, how to find the right accountant, those skill sets that are essential in an accountant to be able to deliver value to your organization. So without much ado, I'll just go on and start with the first slide. So what we have, the agenda for today is an introduction that I'm going to do about myself and the topic. And I'm also going to share with you guys from my perspective what an accountant do. What do accountants do? And I'm also going to be discussing with you about the if your business actually need an accountant and the 7 qualities that you should be looking for in an accountant. Also in our presentation today, I'm going to be covering the aspect of how do you attract the right accountant for your business, and also 5 questions that I believe you should be asking an accountant during the hiring process. And we'll close up with Q&A. And I also should mention to you that in the course of the presentation, if you have any questions, don't hesitate to ask, okay? I want it to be more of an interactive approach, so we just have kind of like have a discussion, right? As opposed to me discussing all the slides and then you doing the Q&A at the end. Okay, so let's go over the first slides. My name is Ezekiel Akem. I'm a CPA. and I also have a MSc in finance. I'm currently the president of Relebridge Inc. Relebridge is a boutique investment firm that is into technology investments. We also do a little bit of minerals and mining as well. So we are currently in the process of raising capital for those different initiatives. So when it comes to accounting and finance, I've done a lot of work in the areas of implementing new accounting systems, processes, and procedures that have actually driven a lot of growth and profitability in the organizations that I've supported in the past, and even the organizations that I'm currently working with at the moment. So, and then about the topic today, what I believe accountants. So I believe that accountants are critical to the success of any business. You know, a lot of times I've seen small businesses being run by a sole proprietor, and they actually neglect the importance of having an accountant on board, right? So they try to do everything by themselves. They do the marketing by themselves. They do the hiring. They try to do the bookkeeping and accounting, and they also try to do other engagements, you know, like going out there to do negotiations for the company as well. Everything they try to do it by themselves. So I believe that the right accountant will actually create sustainable value for your business. So it's very essential to have an accountant on board. So I'll go over to the next slide. So what do accountants actually do? This is a question that if you ask a layman in the street, they just tell you that some would tell you that accountants manage finances, which is true, but it's not just managing finances. It's broader than that. So in a nutshell, what accountants do is they prepare and analyze financial information. And not just financial information, they also analyze non-financial information as well. And accountants can also help corporations and individuals with corporate and personal income tax planning. And another area that accountants are true value contributors are in developing strategies for securing financing. You know, if you want to get loans from a bank, if you want to bring equity investors on board, accountants are very instrumental in that endeavor. You have to make sure that you have an accountant that can enable you to present your case in a way that will be more beneficial to you, and also give you the ability to secure the funding that you're looking for. Other aspects that you can you will have an accountant will be in business planning and financial projections, and also in startup counseling. When you're starting a new company, there's a lot of things that you might need advice on, you know, in order to set up your corporation the right way, have the right systems in place, have the right processes, and making sure that whatever you do is in accordance with all the applicable provincial and federal laws. And other areas that accountants are very essential is in business valuation. So how do you determine the worth of your business? What is the value of your business? And it can also assist you in when it comes to you at the time when you decided that you want to exit, right? You want to sell your business, or you want to acquire a new business. And finally, what I have here is also developing management controls. So accountants are at the forefront when it comes to developing and implementing management controls. So as we all know, it's you cannot run a business without having the right control system. If not, you're just barely just working your butt for no reason. You're not going to get any value whatsoever for all the efforts that you contribute into your business. So you have to make sure that you have the right systems, the right control mechanism, right? You have to set up a framework that will enable you to have an oversight of the revenue that's coming into your corporation, into your business, and also the expenses, the money that your company, your business is disbursing to take care of all those different support services that are required for you to run your business. So it's very important to have that control mechanism, because a lot of the small businesses that I've come across, they actually neglect the control aspect of the business, right? a lot of times they just can't, they wonder why the inventory doesn't align with their expectation. They wonder why the profitability of the company keeps sinking. They wonder why they're having a lot of waste. So all of these things are things that can better be managed when you have the right control mechanism, right? If you have the right framework set up around control for your enterprise. So the next thing that we're going to be covering today is, does your business need an accountant? Okay. Like I said earlier, a lot of sole proprietors, a lot of business owners try to do everything by themselves. They have the idea that an accountant is only essential when you're making like 6 figures or when you're a big corporation, whereas that's not the case. An accountant is very essential from day one, from the first day that you start the business. You might not be able to hire an accountant full-time. You might not even be able to hire an accountant part-time. But however, you can seek the advice of an accountant. So you only pay them for their time, right? Say for a couple of hours for a day, so they can help you structure your business. So it's very essential. So if you ask me if you need an accountant, the first thing I'm going to ask you is, does your business generate revenue? Or do you plan to generate revenues? And secondly, does your business pay vendors, suppliers, employees, etc.? Is your company required by law to file taxes? Does your company track and report performance? Is your company interested in raising equity or debt financing? Is your company planning to scale its operations? And also, is your company planning to go public? So if you answer yes to any of the above questions, then you definitely need an accountant. So let's go back to the aspect of the revenue. If you're generating revenue from, let's assume that you only have one source where you generate revenue from, okay? So would you be interested in finding out how you can increase your top line revenue? How can you increase that revenue? Or how can you be able to have visibility of your revenue, of the revenue that's been generated by your business over a period of time? And also, would you also be interested in finding out how much revenue you need to generate to be able to meet your goal targets when it comes to the net income that you desire for your business, right? When it comes to the return on equity, when it comes to return on capital employed, would you want to know how much revenue you should target to be able to meet your goals? Okay. So if these are all the things that you're interested in finding out, then you definitely need an accountant. Okay, let's look at the second point here. Does your business pay vendors, suppliers, employees, etc.? If your business is engaged in any of these disbursements, then you definitely need an accountant. And when I say need an accountant, I'm not talking, like I said earlier, I'm not talking about bringing an accountant on board and paying them, 60, 80, 100, 120K. No. I'm talking about you actually bringing an accountant that will be the better fit for your business when it comes to cost, right? So it's all about negotiation. It's all about determining exactly how much involvement you want the accountant to have in your business, right? You can have an accountant that can just be a business advisor that you can connect with, say once in a week or every other month, right? It depends on you. It all depends on you, how complex your business is, right? How much help you need. So, in the aspect of you paying vendors as one aspect of a business that we all know is very critical to you being able to deliver value to your customers. If you are a company, a retail company, or a company that provides support services, that relies on vendors to deliver those services to your customers, then that relationship between you and your vendor or supplier is critical. You have to make sure that you manage that relationship systematically. You have to make sure that that relationship is being given if it's being treated with utmost care and consideration, right? You have to make sure that vendors that you deal with are the right one for your business, in terms of cost, in terms of service quality, because the same quality that you're getting from your vendors is that same quality that you're going to transfer over to your customers, right? So how does an accountant become an integral part when it comes to you dealing with vendor suppliers? Okay, an accountant can help you first and foremost with your negotiations with the vendors and the suppliers, because accountants, most qualified accountants, are versed with the art of negotiations. It's something that they do on a daily or weekly basis. So you have to make sure that the accountant on board understand those vendors and suppliers that you're dealing with or that you plan to deal with, so you guys can come up with a plan on how to approach these vendors. And also, how do you report on that relationship with the vendors and the suppliers? What mechanisms do you have in place to manage those relationships? Also understand how that relationship is progressing. Are the vendors actually helping you to deliver value to your customers the way that you want to do it? Are your suppliers aligned with your mission and your strategy? Are they always there to give you the help and the support that you need to be able to achieve your mission and your vision? Okay. And the only way that you can get answers to those questions is for you to have metrics. You have different metrics, KPIs, that you put in place, okay, to manage those relationships, to monitor those relationships, to quantify those relationships, okay, to examine those relationships and see if those relationships are actually being beneficial, are actually delivering value to your organization, okay? So an accountant will help you in all those different initiatives. They will help you to set up the different key performance indicators that will help you on a weekly, monthly, quarterly, or annual basis for you to actually look at the different reports that the accountant is going to prepare for you, and look at it and kind of like dissect the report and understand exactly how the relationship between you and the vendor or the supplier, how the relationship is trending. Is it on an upward trajectory or is it declining? Very essential. You have to understand that. Because I've seen a lot of businesses, trust me, a lot of businesses that have gone under, that have filed for bankruptcy, because they neglect the importance of having a trusted vendor or supplier on board. You need it. Because think about it this way. There come a time when cash is tight, working capital is tight, okay? And getting financing from the bank, right? Loan financing or bringing an equity investor on board is time consuming, right? And it's also very complex. Your best bet could be having your supplier or your vendor giving you some grace period, okay, for the support services that they're offering to you or for the product that they're offering to you, okay? So that will actually give you the ability to deliver to your customers even at zero working capital. Actually, I've seen companies that actually have their vendor and the supplier funding their growth, okay? Have vendors that will come on board when you have a new initiative. Take, for instance, you want to acquire a competitor, and you don't have the right financing for that acquisition, okay? You approach your vendor and discuss with them your plans and your future goals. Your vendor, if it's the right vendor, might even assist you by providing you some financing to be able to acquire that competitor. Why? Because they know that at the end of the day, when you acquire that other company, it's more business for them. It's a win-win. When you acquire that company and consolidate the operations in your company, they merge the two as one corporation or one small, medium-sized company. Now, if you were doing 2 million in volumes, there's a potential for you to double that amount. And as your revenue is increasing at 100%, that effect is also felt in your suppliers, by your suppliers and your vendors, because you need delivery of services to those new customers. And you also need products to deliver to those customers. And where do you get that products from? Your suppliers, from the vendors that you're dealing with, right? So it's a win-win. Okay. So on the aspect of you disbursing funds to employees in the form of salaries and other benefits, you don't need an accountant on board. Why? Because an accountant will help you to structure your business in a way that will allow you to not only comply with the regulatory standards, right, but also be able to manage your relationship with your employees the right way. As we all know, employees are very critical to every organization. You, the owner of the business, are not the one facing the customer. The employees have to have the right mindset, have the right culture, okay, have to be inspired, have to be influenced the right way for them to deliver the value that you seek, right, to your customers. And how are you going to be able to meet that? You have to meet that by making sure that funds are being set aside to take care of your employees when it comes to their salaries and benefits, okay? If you're an organization that also gives your employees a commission for the sales that they deliver for your organization, you have to also make sure that that commission is paid to the employees in a timely manner, okay? You don't want a situation where when it's let's say on the 15th of each month, that's the deadline for you to make that, disperse that payment. You don't want a situation when that time comes, you're not able to meet up with that commitment. Why? Because you're tight on cash, okay? But if you have the right accountant on board, your accountant will plan things accordingly and make sure that funds are put aside to meet up with that obligation, regardless of whether your company is doing well or not. You know, a lot of times small companies, the owners will be like, "Oh, we're not doing well we didn't do well this month, so I'm sorry, we're not going to be able to meet up with our obligation from the commission standpoint." Okay, you can tell that to an employee because we all know how they're going to feel about that. They're not going to be happy. And when an employee is not happy, guess what? They're not going to be able to deliver the value that you want to deliver to your customers. Okay. So you want to make sure that your employees at all times have the right mind frame and are also willing, committed, okay, to deliver value to your customers. And like I said, if you want that to happen, make sure that funds are always allocated to take care of your employees whenever that obligation becomes due. Okay. The third point that I'm going to touch on right now is filing your taxes, your corporate taxes. Okay. As we all know, they said in life, two things are certain, right? Taxes and debt. Okay. It has to happen. There's no way around it. You can run away from it. Okay. So tax planning is also a very, very essential aspect of your business that a lot of times businesses take it for granted. And then at the end of the day, they have the tax man come knocking at their door, you know, when all the taxes have accumulated, right? So you have to make sure that you partner with the right accountant that can access your company's performance and look at avenues where they can help you to save on corporate taxes, right? So that way, and also making sure that the time that you have to remit those taxes to the government, you have that money available, right? So you don't start incurring interest on those taxes and also being non-compliant. Okay, it's not a good sign. Okay, you want your business to always be in compliance when it comes to taxes. Okay. And the fourth point that I have here on the slide is, does your company track and report performance? This, I would say, from my experience, I'll be honest with you guys. 99% of the small companies that I know, so I'm talking about the ones that I know on a personal level, business owners I know on a personal level, and also ones that I've done, I've assisted with your business. They actually neglect the importance of tracking and reporting their performance. Okay, how can a business owner run their business for a month without even knowing how the business is doing? You're not running a business. If you go a month without knowing how your business is doing, then you're not running a business. You might as well just shut down the business and go home. Yeah, or you might as well just shut down the business and get a 9-to-5 job. Because at every point in time, whenever you're lying down on your bed, you should be able to have at the back of your mind, have an idea of how you're doing with respect to your revenue. Is your revenue going up or is going down? And if it's going up, what are the drivers? Why are your revenues going up? Did you win a new contract? Okay, or did the price of your product did it go up? Or did you start having more foot traffic in your store? Right? These are all things that you have to understand. Okay, but a lot of times businesses neglect this fact. Okay, revenue goes up. Oh, I'm lucky this month. Revenue goes down next month. Oh, it's not a good month. I wish it was the way it was last month. But guess what? It could be better than it was last month. If only you pay attention, right? If only you pay close attention and understand your numbers. And how do you pay close attention and understand your numbers? By having the right accountant on board. With the right accountant on board, they will make sure that they enable you to track performance, okay, on a monthly, quarterly, and annual basis, or even on a daily basis, depending on the nature of your business, right? So that way you have visibility on what's actually happening in your business. Okay, very, very, very essential. You have to understand what is happening in your business. You cannot just depend on macroeconomic variables that you and I know you can't control. You can't say, oh, it's because of coronavirus, or it's because of other aspect of the broader economy. No, you have to understand the micro elements of your business. Okay. Let's take for instance, let's say you're a local shop in a community. Okay, if your revenue is going down, you want to know why your revenue is going down. Maybe it's because you're not getting that much foot traffic. Why are you not getting that much foot traffic? Is it because you now have a competitor that's just open a location not too far from you? Okay, if that's the case, guess what? You have to find out exactly what they is offering and make sure that you not only deliver at that same level, but deliver better service to your customers. Okay? And how do you understand exactly what they offer to that customer, to their customers? By having someone like an accountant who understands how to quantify service offerings. Okay? He has to be able to how to quantify service offerings. And that way, you and your accountant can sit and say, okay, this is what is being delivered to those customers. How do we beat that? Okay, very essential. How about other micro variables? Like for instance, because you decided to increase the prices of your key products, customers are very reluctant to buy from you. They are deciding now to go to Walmart or other big retailers where they can get it for cheap. Because at that point in time, customers are comparing the increase, what they will be saving and the additional money that they're going to be spending on gas. If your product costs $10 extra and they know they can only spend like $3 in gas to go to Walmart, guess what? They'll go to Walmart. Because at the end of the day, at Walmart, they can also buy more stuff, not just the one product that they want to get from you, right? So these are the things that you as a business owner has to understand. And for you to understand these things, you have to have someone that actually understands how to quantify these metrics. Okay. So let me go now to the fifth point that we have here. Is your company interested in raising equity or debt financing? As we all know, you can't run a business without looking at one point to secure financing, okay? Unless you're very comfortable with the level that your business is operating, unless you're not interested in increasing your revenue and also increasing your bottom line profit, okay? If you are a company or an entrepreneur that aspires to grow, then you definitely want to have someone that will bring in equity for you, okay, for like a shareholder, or bring another equity partner, right? Or have a partner bank that will always be able to lend you, always be willing to lend you money, okay? Very essential. And how do you build on those relationships? You need an accountant, a qualified accountant on board. Because you on your own, might not be able to kind of communicate the true potential, the actual value of your company to these different stakeholders. A bank manager might not be conversant of the language that you are using to explain your business activities to them. No, they might not be able to understand the language, right? And if you're not understanding that language, how are they all going to be able to understand how your business is doing, your performance? So you need an accountant on board, a qualified accountant, someone that understands, firstly, what equity partners are looking for, okay? What banks want to see in your financial statement? What banks want to see in your business plan, okay? They want to make sure that you are not just pushing out numbers to the equity investor or pushing out numbers to the bank, but make sure that whatever you're sending out there is an actual representation of the financial health and the potential of your business. Very essential, very essential. So in order for you to be able to do that, you need an accountant, a qualified accountant at that. So the next point that I have here is your company planning to scale its operations? So this is also part of, I can also say this is also part of the raising equity and debt financing, so they can also come in one sentence. Because if you want to scale your company, you definitely have to find ways to raise additional capital. Okay, you can scale your company by reinvesting the profit, yes, but we all know that is always tough. Why? Because you re-injecting profit into your business can enable you to go, but at a very slow pace. Okay, if you want to expedite the scaling your operations, then you definitely have to seek for equity financing or debt financing from the bank. So the next point that we have here is your company planning to go public? A lot of companies, a lot of small entrepreneurs and mid-sized companies just run businesses just to take care of themselves and their family, right? There's no long-term vision. There's no succession planning. There's no exit strategy. In my opinion, if you're running a business without an exit strategy, then you're not running the business the right way. You have to have an exit strategy. You can't run that same business for the rest of your life. It's gonna become boring at one point, right? So you have to have an exit strategy. And how do you have an exit strategy? You have an exit strategy by deciding on what path to take for your company. You can either go public or sell your company at one point, okay? Or you can also scale your company to the point where you don't feel like you are required to be in a business. You already have the right systems in place to have someone else manage the different aspects of your business for you. Okay, at which point you can retire and have them manage that company for you. So when it comes to going public, when your company that feel like you have but you can meet the requirements to go public. You can meet the requirements from a revenue standpoint, from a systems and processes, and also management and board of directors standpoint. You have the right skills, sets of experience, the right professionals on board to help you in that engagement, right? Then it's something that you can consider. And before you consider that, you have to have the right accountant on board. Because an accountant is going to be the one to help you with the prospectus. Okay, that is also something that is essential for you to go public. And I should also bring this to your attention. A lot of times, companies feel like going public is a lot of commitment that they're not going to be able to deliver on. However, all the support systems are out there for companies. All the support systems are out there for you to leverage to your benefit, okay, to be able to meet up with all the regulatory compliance that are required for a public company. So like I said earlier, if any of the 7 points that I mentioned are applicable to you, then you definitely need an accountant on board. So let me go on to the next slide now. So yes, you've determined that you need an accountant for your company. But how then do you find the right accountant? Okay. What are the skills that are required for an accountant to be considered a valuable resource to a company? What I have here on the slide is just for my own personal observation and ideas and perspective. This is what I think based on my experience that I've had in the last couple of years. I truly believe that for an accountant to be the right fit for your business, they have to be transparent in every aspect of the dealings with you. Okay, every aspect that they want to engage your company with the outside stakeholders has to be done in a transparent manner. Very essential. This is critical. Secondly, they have to be accountable. They have to maintain a high standard of accountability. Thirdly, they have to be an individual with integrity, high integrity. You want to deal with an accountant that understands the value of integrity because it goes a long way. Fourthly, they have to be performance-driven. What I mean by performance-driven, an accountant should be the type that really thrives on delivering value. To them, an organization is all about delivering value. Performance, performance, performance. It's at the forefront of their dealings with you. Right? They want to make sure that your company is actually delivering true value to your customers. No compromise on that. And they have to be an accountant that also has the right skill set to understand what are those aspects of your business that customers really, really cherish, what customers actually need from your business. And those are the things that they're going to quantify and make sure that they have a performance mechanism around that, okay, to be able to measure that performance on a weekly, monthly, quarterly, or annual basis. It all depends on the nature of your business. I also have here on the slide innovation, right? Innovative. You want an accountant that is innovative. Accounting is not just about numbers, right? It's not just a number game. It's beyond that. An accountant should be able to sit with the business owner, with the entrepreneur, and look at strategy. Okay, where are we right now? Where do you want to go? Where do you want to be in 5 years? And how do you get there? These are all things, discussions that should be that a business owner should be having with the accountant. Because based on your objectives, your goals, your profit target for 5 years down the road, An accountant should be able to quantify all those different aspects of service delivery or product that you want to deliver to your customers, and see at what level you have to deliver those to be able to hit your target in 5 years. Very essential. So an accountant should also be able to look at the way things are right now and give you advice, be a valuable business advisor in the aspect of how do you make sure that the service that you're delivering today will meet up with customers' expectation 5 years down the road. You should be able to get insights on that from your accountant. The other point that I touch on here is authenticity. An accountant should be authentic. Okay, because in a nutshell, an accountant, regardless of whether you have them on board on a full-time basis or part-time basis or as a consultant, they are a reflection of what your organization is about. So them being authentic, if that same authenticity reflects your organization. So you want to make sure that you deal with the right accountant, an accountant that's authentic with themselves in their dealings with you. Finally, I have here on the slide, detail-oriented. Say detail-oriented from the aspect of looking for an accountant means that you have to have an accountant that not just focuses on the big picture, but also understands the small pieces that adds up to come up with the big picture, right? All the nitty-gritties, all the little pieces here and there, right? Because why that matters is because they have to understand if the big picture is not the way that we had anticipated, right, when we're doing our planning for the year, right? Then we have to understand what has changed, because there's always, the whole is always bigger than than its parts, the sum of its parts, right? So those parts that together form the whole, your accountant has to understand whenever there's a deficit in any of those small parts, okay, or when any of those small parts is missing, right? That's risk right there. They have to understand how to mitigate that. Okay, how do they mitigate that risk? So your company or your business can be able to meet up with your good objectives and your goals. Okay. So it's very essential, very critical that the accountant understand the small pieces that adds up to form the big picture. Okay, so I'll move over to the next slide. Yeah, I was trying to talk about how do you attract the right accountant for your business. Yeah, we've touched on the skill set that are essential in an accountant, what an accountant has to possess to be able to be a true value contributor to your business, to be able to deliver value to your business. So now I just want to give you guys an idea on how you can be able to meet up those accountants and partner with them. So what I have here, the first point that I have here is you have to be able to, depending on the nature of your business again, you can write a blog post and discuss your vision and goals, and state what you're looking for in an accountant. So by you doing this, depending on the medium that you use to share your blog, it might just fall in the hands of the right accountant that might look at your vision and your goals and be like, wow, I want to work with this entrepreneur. I want to work with this business owner, right? And then they're going to reach out to you and try to discuss on the possibility of you two working together. The second point that I mentioned here is you attending CPA networking events. That's Chartered Professional Accountant events. There's always CPA events. Even right now, you have virtual events. But when all this coronavirus stuff is over, yeah, you have that ability to go to physical events and network with qualified accountants, right? So you just go to those events, network with different accountants, discuss your business interests, your plans, and your vision, And who knows, you might just be talking to the right accountant, someone that has the right skill set, and someone that will be inspired by what you said about your business and want to partner with you. Okay, so that's another avenue for you to be able to meet the right accountant. The third point that I stated here on the slide is you advertise your business and accounting or consultant job opportunity in CPA Magazine. Because CPA Magazine has a broader reach. So CPA Magazine will enable you to reach a wider audience of very qualified accountants. I mean, very qualified accountants. From accountants that are making $50K to accountants that are making millions of dollars a year. Okay. So it all depends on the kind of accountant, the type of skill set that you're looking for. At the CPA Magazine that's been read by hundreds of thousands of accountants could be a better fit for your business. And when I talk about CPA Magazines, it's something that you can get done for as little as $250. So with $250, you can actually be able to reach the right accountant. The fourth point that I have here is for you to post your job, your accountant or consultant job on popular job boards like Indeed, Eluta, Ocupolus, LinkedIn, etc. So we all know that these job boards are plenty of times to work magic. So you might just be lucky to have the right accountant that's just scrolling through opportunities and come across your job and feel like your company is the right fit for them. And they decide to reach out, send your resume, and you take things from there. And finally, you can partner with the right accountant, meet and partner with the right accountant by asking CPAs, chartered professional accountants. If you ask any qualified accountant, if they have other accountants that they know who might be interested in your opportunity, who might be interested in working with your organization, you might just be lucky to meet the right individual by doing that. So let me go now to the next slide, which is 5 questions for you to ask an accountant during the hiring process. So let's assume that you've done one of the 5 steps, you decided to implement one of the 5 ideas that we just discussed. And you happen to come across the right accountant. How do you know for sure if they are the right fit for your business? So I have here 5 questions that I believe are very essential, in my opinion. There could be more, but in my opinion, these are the questions that you should be asking an accountant before you bring them on board, before you decide to partner or hire them for your organization. So the first point that I have here is you should ask the accountant, what can you do for my business? Very essential. If you meet an accountant that says, oh, I can help you to record your transactions and also prepare financial statements. Okay, that's required. But what can you do for my business? If they can't say anything aside from the recording of transactions and producing financial statements, then believe me when I tell you this, that they're not the right fit for your business. They're absolutely not the right fit for your business. I guarantee you that. Because accounting should be more than recording transactions and reporting transactions. It should be more than that. If you just want to get someone that record and report transactions, you might as well just get a bookkeeper. That's what a bookkeeper does. You can't invest the additional funds that are required to bring an accountant on board and not get the value for your investment. Okay, you might as well just hire a bookkeeper. Bookkeepers will help you to manage your books, record your revenues, your expenses, and also some of them also have the skill set to file your taxes. Yeah, you just get a bookkeeper. You don't need an accountant. You don't need a qualified CPA. So another question that you should have asked an accountant is, have you ever created value for any business? And if yes, how so? So what I mean by value here is, let's say, for instance, Their organization is doing 100K in revenue annually. And then you have an accountant on board that you pay in, let's say on a contractual basis. Say you see them like once every week, and you pay them like say $500 for every meeting, and then so on a month you spend $2,000. And this accountant, at the end of the year, after investing that money in an accountant, I call it investment because it should be an investment. Your revenue still stays at 100K, or it drops to say 80K or 90K. You have to fire that accountant. Trust me, you have to get rid of that accountant. You have to let them go. You don't need an accountant on board that's just going to maintain status quo. No. You want an accountant that will actually drive growth and performance. Very essential. Very essential. If your bottom line profit, let's say the revenue is maintained at the level that it was because of other factors that are beyond the accountant's control. Okay, how about your costs? Are they giving you that ability to cut costs? Because either way, cutting costs will also help you to increase your bottom line profit. Or look at it from the aspect of you, if you're a company that has invested heavily on assets that are required for you to run your operations. Is your accountant helping you to manage those assets better so as to increase the lifespan of those assets and also be able to cut the cost when it comes to the maintenance of those assets? Is your accountant giving you the insight that you need to manage these assets the right way? So this is a way that an accountant should deliver value for your organization, for your company, for your business. The third point that I touched on here is, what kind of reports would you be preparing for my business? So you have to ask an accountant, what kind of reports would you be preparing for my business? If the accountant says, I'm going to prepare a sales report for you, I'm going to prepare a profit and loss report for you, or income statement, I'm going to prepare a balance sheet for you, I'm going to prepare a cash flow statement, I'm going to prepare a statement of changes in shareholders' equity. Okay, sounds good. But guess what? Every other accountant can do that. And some bookkeepers have those skill sets to be able to produce all those different sets of financial statements. Yes, a lot of bookkeepers have those skill sets. So just ask your accountant again, what kind of reports would you be preparing for my business? It should be reports that are, in addition to those ones that I've mentioned, those sets of financial statements, they should be able to prepare you KPI reports, key performance indicators. How is your business doing when it comes to all those different metrics, like return on assets, return on equity, okay, vendor spend, also if you're a retail company, like sales per square foot, all those different metrics that are very essential to your business. An accountant should be able to deliver a report that shows you how your company is faring. And also not only how your company is faring, but how is it outside, how the company is doing in your industry. What is the general trend when it comes to your type of business? What is new out there? How can you leverage what is new out there to drive growth and performance? How can you leverage the different skill sets, professionals that are out there to drive growth for your company? These are all the valuable insights that an accountant should be giving to you. And all of this should be quantified in a report that an accountant should present to you on a monthly, quarterly, or annual basis, also depending on the nature of your business. Another question that you should be asking your accountant is, what will be your top 3 priorities? So if an accountant is coming on board, they should have an idea based on the kind of business that you're into. They should have an idea of what they would be focusing their attention to. What are they going to be doing 70% of the time? Because, or 80% of the time. Let me go with the 80-20 rule. What are they going to be focusing their energy on 80% of the time? You have to know that before you bring them on board. If an accountant tells you that, oh, I'm going to be focusing my energy firstly on making sure that I record all the transactions and prepare your financial statements, the different sets of financial statements. Okay, that is good. It's something that's essential for your business, yes. But what else? What else is your priority? What else are your priority for my business? You have to have an accountant that will say, I will be a valuable business advisor, a key contributor to your business in the areas of looking at alternative ways that you can raise working capital for your business. I will be a valuable business contributor, a valuable business partner that will give you insights on how you can leverage the different skill sets that are out there, how you can leverage the new sets of the different technologies that are out there to be able to automate your operations, to be able to streamline your operations, to be able to actually cut back on a lot of different activities that are draining your energy. Okay, helping you to focus on the things that actually matter, helping you to focus your attention, your energy, and also have constant brainstorming sessions on how you can deliver value to your customer. These are some of the conversations that your accountants should be driving. They should be the one bringing those conversations on the table, not the other way around. Okay, because an accountant should understand your industry very well. Let's say, for instance, you're in the retail industry. You should understand what is happening with different retail businesses out there. How does the micro and macro economic aspect of your business look like? How can we leverage the new government regulations to drive growth in your company? How can we leverage the changing trends in your competitive landscape to drive growth in your company? Okay, a company that used to be a top competitor for your business just wind down their operations. What does that mean for your business? You cannot just sit back and fold your hands and say, oh, the guy is out of business. Who cares? That's more business for me. What happens 1 month, 2 months, 3 months down the road? Nothing is happening. Your revenue is still stagnant because you didn't take the right steps. You didn't take the right steps to leverage on that opportunity to increase your top line and bottom line performance. So these are some of the conversations that you should be having with your accountant. Let's look at other micro elements of your business. A new technology has just been developed that is helping other retail businesses to manage their operations better. It's helping retail business owners to save money and at the same time to expedite service delivery. How do you get insights on that? And how do you actually implement the new technology? An accountant should have oversight on that. An accountant should be able to identify those new technologies. Which of those technologies will be the right fit for your business? And how does that technology get implemented in your business to actually deliver value for your business? So you need an accountant that can do that for you. The final question that I have here is, have you ever been faced with conflicting priorities? And how did you finally decide? Accountants always face conflicting, like most other professionals, like lawyers, always face conflicting priorities. So when an accountant is faced with conflicting priorities, let's say, for instance, the deadline is approaching for them to deliver on your tax obligations to the government. You also have to meet up with a deadline to send your business plan to the bank for loans that you're working on. You also have equity partners that are interested in investing in your business. However, they want you to send them a business plan. Okay. How do you manage those different priorities if there's a tight deadline? How do you manage those different priorities? So you need an accountant that will be able to manage those different conflicting priorities. Very essential. They should be able to not only manage the relationships that you have with the bank, with the equity investors, with the government, but also be able to leverage on those relationships to also give you the ability to deliver those different deliverables to the government or to the bank or to the equity investors within a certain time frame that is still going to be able to get you what you want from these different partners. Very essential. It is very essential. Sometimes it all depends on you. It only needs your accountant to to call the bank and say, listen, we have these other conflicting priorities. Can you give me a day or two? Meanwhile, in the meantime, I'm just going to send you the preliminary business plan for you to just go over it to have an understanding of what we're working on. So that way, when I send you the final business plan, you won't have to do a lot of work. That's what the right accountant will do for you. They will make that initial step, as opposed to just staying silent and letting the bank manager or equity investor or government authority to just be doubted, just be in a state of doubt as to what is going on, right? They'll leverage those relationships to kind of like do what is right for your business and help you maintain a good standing when it comes to compliance with the regulatory authorities and when it comes to maintaining a good relationship with the bank and equity investors. So you have to have an accountant that is able to manage those conflicting priorities. Very essential. So after you've asked all these 5 questions to your accountants, like I said, based on the feedback that you get from them, you will be able to determine for sure if they will be the right fit for your business. So you always want to make sure. And also, there's a lot of other questions that you can ask an accountant. I'm not saying that it's only these 5 questions. No. There are a lot of other questions that you can ask your accountant. But for my opinion, these are the top 5 questions that you should ask your accountant before you even take any initial step to hire them, to bring them on board. Because at the end of the day, you want to make sure that you invest your time to find the right accounting partner, the right accountant for your business. You want to make sure that whoever you're bringing on board has the right skill set, has the right character, has the right competence for your business. Very essential. This cannot be oversaid. Very essential. You have to make sure that this is done the right way. There's plenty of accountants out there. Every year, the CPA graduates a lot of accountants that already have experiences with different industries, different company sizes, But like I said, it's not just about the financial statements. It's not just about recording transactions. It's way beyond that. Way beyond that. If your accountant is not delivering value to you in the form of helping you increase your revenue, if you're not seeing your revenue going upward, if you're not seeing your costs going down, if you're not seeing your assets being managed the right way, if you keep having your assets getting shut down because the maintenance wasn't done at the right time, or because the funding for the funds required to maintain those assets was not available when the maintenance became due, then you don't have the right accountant. Then you absolutely do not have the right accountant. The accountant should be able to know how your relationship with your vendors, suppliers, and employees is trending. What does those vendors and suppliers, your employees, what do they think about your company? Are they being compensated the right way? Is your company meeting up with its obligations from a financial standpoint? Is your company fulfilling its promise to the customers? When your customer make a promise to a company, if your company makes a promise to a customer, does it deliver on that commitment? You want an accountant that at the end of the year will sit with you and look at your performance. Where are we? Okay, this is how much revenue we generated this year. Okay, this is how much money we spent to generate this revenue. This is how much taxes we pay to the government. And this is what we have as net income for the company. So you look at all those different aspects of your financials. Say, okay. And then ask you guys are having a conversation. Well, what do you want to achieve next year? What do you want to achieve in 5 years? So with that being said, your accountant now will sit with you. You guys will brainstorm ideas on how you want to transform your company. I call it transformation because you can't be a company that keeps maintaining status quo. Every year you're doing 50K in revenue, 100K in revenue, 200K in revenue, then you're not running a good business. There should be some progress. At least there should be some progress. Even if it means 10% revenue growth, it's still progress. Progress is progress. 1% revenue growth, progress is progress. It's better to have that progress. So an accountant that will sit with you at the end of the year, look at all those different sets of financial statements. Look at all those key performance indicators. Look at your performance, overall performance, and have a conversation with you. Where do you want to find yourself in 1 year? What is your vision for your business in 5 years? What do you want to do for your business? Where do you want to be? Where do you want your business to be? With that being said, you should, after having that conversation with your accountant, you should be able to tell your accountant exactly where you want to be in 5 years. When you determine where you want to be in 5 years, based on that understanding, your accountant should be able to come up with plans that will enable you to get there. So planning is a very, very critical element for every business. And from my experience, businesses that I've come across, they tend to neglect the aspect of business planning. You have to plan how you want to achieve your objectives, how you want to get your vision achieved in 5 years. So you plan your resources. These are the resources that I have right now. This is what I need to get to where I want to get. That is what an accountant has to help you with. This is where you are. This is what you need to get to where you want to go. They quantify all those different elements of your business. All those different aspects of your business, all the different things that has to happen for you to get to your final destination. An accountant should be able to do that for you. I think we have a chat here. Okay, this company. Okay, so that planning process, like I said, is very, very essential. So business owners, my advice to all business owners is they shouldn't overlook. They shouldn't assume that financial planning and analysis is only for big companies. No. You need it as well. Small, mid-size, large corporations all need financial planning analysis. You have to be able to know where you're going. You have to be able to know where you are and what is required, what is needed for you to get to where you want to go to. Right. So with that being said, I would like to open up the floor to any questions that you guys might have with regards to the presentation today. Does anyone have any question? I know we still have about 17 minutes to go. So I believe that will be sufficient time for us to get into a Q&A. No question? Okay. So if nobody has a question, I'll just go to the last slide here. So what I have here is the business and address, where you can find us, how you can reach us. So you can contact us via email, or you can also reach me through this telephone number here, 416-800-8934, extension 122. You can also visit us at 405 The West Mall, Suite 910 in Toronto. You can also visit our website, www.realibridge.com, where you can find valuable information on what we are working on at the moment. Okay, I have a question here. Khadija is asking, what happens if planning goes on past 5 years? Is that a downfall? That's a very good question. To be honest with you, in my experience, I've never seen planning go beyond 5 years. But I've actually seen an entrepreneur that did a planning for 10 years. So 10 years is kind of difficult for you to say exactly what is going to happen in what you would like to be in 10 years time or beyond 5 years. But it doesn't mean that it's not something that you can do. For sure, you can do that. You can plan for 7 years, but generally, it's always, the rule of thumb is always to use 5 years. So I wouldn't say that it will be a downfall. It's not a downfall. It's all based on your understanding of your business and also your vision. What vision you have for your business? Where do you see yourself in that time frame that you're projecting? If you're planning on a 7 years time frame, where do you want your business to be in 7 years? And then you plan accordingly. So I don't see that as a downfall. Does anyone else has any other question for me? I just give it a few minutes there and see if we have any other questions from the attendees. Okay. Well, it doesn't seem like there's anyone else that has a question for me today. But like I said, you can always reach me at eakem@realbridge.com or at 416-800-8934 extension 122. And you can also visit us at 405 the Westmore Suite 910 Toronto, Ontario. So with that being said, I will conclude the presentation for today, and I hope to talk to you guys soon. Take care. Bye.